live on Facebook. I'll be right back with you. Just one moment. Hope you're doing well. Okay. And I think we are live on Facebook. Hi everybody. Welcome to tonight's lesson. I am Sami Abu Saad, Director of Education at T3 Live. Hope you're doing well. And we're going to go ahead and get started with this week's lesson. As you know, I always do these lessons on Tuesdays after the close. So welcome to tonight's lesson. Before we get started, I need to share with you a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. So make sure you agree to that before proceeding with today's video. All right. While you review the disclaimer here, I just want to say also, if you find benefit in today's video, please be sure to hit the like button. That helps me out a lot. And be sure to check out the links in the description. If you want to find out more about what I do and my services, feel free to check out the links in the description. All right. Okay. So with that said, we are going to go ahead and get started. What I'm going to talk about today is a video that I did this weekend. Did I drop? Yeah, I dropped a link for this weekend's video. I received lots of comments, lots of questions about it. Feel free to check it out. But what I'm going to talk about today is how you can tell whether a gap is professional or novice. Okay, how you can tell. There are multiple ways you could do it. So we're going to talk about that. Let's see. Looking at the room in the VTF to see if there are any questions. No questions, so we should be good to go. So here's what I said this weekend, basically. First, there are two types of gaps. I'm going to take the camera down just for a second here so you can, I don't block anything, okay? There are only two types of gaps in existence, professional and novice. Pro-igniting gaps ignite new trends. They are to be played in the same direction as the gap. You want to play them with the gap, not against it. So if it's a gap up, you want to look to play it long. If it's a gap down, you want to look to play it short. Novice or exhaustion gaps end or exhaust old moves. They are to be played against, meaning in the opposite direction of the gap. So if it's a gap up, you want to look to play it short. If it's a gap down, you want to look to play it long. Now, okay, you got that? So let's go to the next slide. And I can start going over lots of charts here, but I don't want to do that just yet. I want to give you a few tips, okay? The first of which is to tell you that every gap is basically a professional gap. So here's the tips that I want to give you. Number one, every gap should be considered pro unless it's clearly novice. You might say, well, what's clearly novice? I'm going to talk about it in just a second. But assume that every gap is a pro gap, okay? When you're analyzing gaps. Now, there are different levels, different tiers, so to speak. Some gaps are tier C or, tier 3. Some are tier 1 or A-rated gaps. So it's different from gap to gap. But most gaps, 90% of all gaps, I would say, are professional gaps. Professional gaps, so that's the first thing I want to say. The second thing is professional gaps usually gap from the 20 MA on the daily chart, from the area of the 20 MA, meaning they're not extended before gapping. They don't come from extended, or some people don't know what extended means, overbought or oversold. They don't gap up from overbought patterns, and they don't gap down from oversold patterns. They gap from the area of the 20 MA. Okay? So that's the second. Third thing is usually professional gaps go against the direction of the most recent bars. So if you look at the last 2 days or so, so if we're looking at today's gaps, you'd look at Fridays, maybe Thursdays, the most recent bars, last couple of days, sometimes just 1 day, sometimes 2-3 days, the most recent move. Professional gaps usually gap against it. So if it's a move up, If the stock moved up on, let's say if today is Tuesday but Monday was closed, if the market was closed. So if on Friday the stock moved up a good amount, most professional gaps would gap down, okay, would be down, not up, okay? But I don't want you to think that, oh, if yesterday's bar was green, it means today everything that's gapping up today is novice. No, not really. Again, most professional gaps go against the color of, or the direction of the most recent move that the stock put in. Most recent move refers to the last day or two on the daily chart. But that should not be looked at too strictly, so to speak. Just keep in mind what I've already said, which is most gaps are professional, not novice. It would have to really jump out at you as a novice gap for you to think you should look to fade it, to short it if it's a gap up, or play it long if it's a gap down. Number two, I said most professional gaps gap from the area of the 20 MA. They're not extended. They don't gap up from overbought patterns or gap down from oversold patterns. And number three, I said they gap against the most recent move. So if it's a move up, they usually gap down. If it's a move, if the stock broke down, they usually gap up. Okay? So those are just 3 tips that I can give you right off the bat. We're going to go in more detail over the next 30-45 minutes or so. Okay? But what was I going to say? So let's take a look at novice gaps, because we said everything is pro unless proven otherwise. Let's take a look at some novice gaps from, look, I have a notebook. I'm old school, but it's also more efficient, I think, to maintain for me to go over the gaps list by hand rather than through Excel. So I have a notebook with the gaps for every day. So that's today's date. I don't know if you can see it, probably not. That's January 21st, Tuesday, Friday, January 17th, Thursday, right? So I have a gaps list for every single day, and I maintain it. I maintain a notebook for all the gaps. But this is I can go over this in detail, how to actually create a notebook and how to use it to facilitate trading at the open. This would actually be a really good topic to talk about because it's very powerful. But for today, I just want to look at, I'm going to look at the last few days and look at the gaps, the novice gaps that I have marked them as novice in my notebook, and see what they look like, and then go over these, okay? And then we'll go over some professional gaps. But here from my notebook, here's what I got today. I think we had one, but I didn't really. I didn't have it at the open. I don't have it in my notebook. I think EVRG or EVR. I think it was EVRG. I think it was partly novice, probably. EVRG, definitely novice, actually. It's just that this bar was narrow range bar and not a wide range bar. Here it is. Sorry, I forgot to switch over to the charts. There you go. I used the daily chart for gaps, but I didn't have this in my notebook, so I'm cheating here because somebody brought it up in the room, and I was like, oh my God, this would have been a good gap, a good short, but I didn't have it in my notebook. I didn't find it at the open. So nothing really today that was novice. NVAX had the potential to be a novice gap, but it was more of a mega gap. So ignore the NVAX from the day before. So I'm just gonna look at the day before. Okay, from the day before, I do have some novice gaps. Here they are: PRGS, JMIA, and PINS from the day before, and that's in my notebook. Okay, the day before that, I have XPO, RBZ. Oops, 1 second, please. Let me move the mic out of the way. So XPO, RBZ, WNS, CH, a lot of novice gaps. Most of the time, we only have like 1 or 2 novice gaps per day. We don't have 4, but the market has been running up. So a lot of things that are gapping up right now are a bit novice because the market has been running up. Most stocks have been running up. So anything that gaps up in the direction of the trend is, I have MNTA from the day before that. I have Beyond, I have Tesla, and I have GWPH from the day before that. Just, again, looking at the last few days. Wow, we have a lot of gaps here. NKTR, OCFT. I've never heard of that symbol before. OCFT. And then the day before that, I have TRIL. The day before that, nothing. The day before that, I have BNTX and PLX. I don't remember these symbols, to tell you the truth. Okay, the day before that, I don't have anything. And then AVAV, KTOS. And then we can keep going, but we can keep going, but I don't think it's necessary. We got a lot of things to look at here. So notebook out of the way now. Let's take a look. So notice the most recent move was up a lot. See it on the daily chart? Again, daily chart is your key time frame for analyzing gaps. So as you can see, the stock had already separated from the 20 and printed multiple green bars in a row prior to gapping. So that's novice. Now we also it's much preferable when the stock gaps from a solid green bar rather than a doji bar. A solid green bar. But in this case we didn't have a solid green bar. So this was a good gap, but I actually didn't have it in my notebook today. Somebody, as I said, in the room mentioned it. This was a tier 1 gap. PRGS. You know what a tier 1 gap is? It means close your eyes and do it short. Okay, so check it out. Just understand the psychology behind novice gaps. This stock was getting bought up, 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 and up. Look at this. Look at the volume. Everybody rushing in, and then the next day it gaps up 10%. What does that tell you? That's novice. That's amateur traders, novice rookie traders jumping in, thinking this is the next Tesla. Okay. So you want to look to short something like this, not to play it long, because the professionals have already bought it. And so when a stock moves up so much and then gaps up, guess what? That's probably the last batch of buyers rushing in to buy it. So you want to look to play it short, not long. So that's a really, really good gap. Now, we're not going to, if you say, well, no, that's professional, then I'm sorry to say we would be on two different planets. So there, you might as well just not discuss gaps with me. If you say something like this is professional, then it means we're on completely different zip codes. So we shouldn't even talk about gaps, right? Discuss gaps. But that's totally novice. JMIA, it was novice in that it was gapping over a green bar, but with novice gaps, bigger is better. Okay, the more extended, the better it is. So as you can see, this wasn't really much of a gap. I'm not talking about today. I'm talking about the day before. It was on the day before. Okay? So I wrote it down as a novice gap, but I probably went over the gaps list like at 8:30 New York time. By 9:30, it probably lost some of the gap. Usually when it's a small gap like this, you want to stay away from it. And mind you, it still worked. It still came in. Next on the list was PINS, which was not today, the day before. So up, green bar, away from the 20, and then a gap up. That's a little novice. Was it a good novice gap? No, it wasn't a good novice gap, but it was novice. So, okay, continuing on. XPO, let's take a look. Oops. XPO. Okay, so XPO, why are the charts acting up here? Okay, so notice XPO printed 3 green bars up in a row and then gapped up. Okay, so that's a bit novice, but you can also say, well, not really, because it gapped from the area of the 20. It wasn't very far from the 20, and you'd be right. So this is what I call the in-between gap, meaning I play it short only if it runs up after the open. Okay, and I play it long if it pulls back first. So if it pulls back, then I would look to play it long. If it runs up, then I'd look to play it short. Does that make sense? This is kind of an in-between, could go either way. I wrote it down as a novice gap, but really the truth is it's in between. Now, since on any given day I have a dozen probably professional gaps, so I like anything that's in between, I like to lean novice. I like to put it with the novice gaps because I already have a lot of good professional gaps usually. So why bother with one more that's mediocre as a professional gap? Maybe I can actually play it as a novice gap and play it short. Next on the list is RBZ, and this is like the JMIA. Printed a big green bar. The chart is very squished, so you'd have to kind of open it up to see. Printed a huge green bar, and then the next day gapped up. That's novice because it's far from the 20, already a huge green bar. The better novice gaps are the ones that have already been running up, like the PRGS, up, 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 and then a gap up. Does that make sense? Those are much better than just one day, like the RBZ, like the JMIA, where just one day. WNS, I don't remember what this was. Okay, moved up, had been moving up, and then on Friday, or not Friday, like Wednesday or so, printed a solid green bar and then a big gap up the day after. So this was a bit novice. Was it a good novice? No. None of these XPO, RBZ, WNS were great novice, but bit novice. This was a good novice gap, but the problem with this is it was gapping just above the 200 MA. When stocks clear the 200, it wasn't gapping just above, but when they clear the 200, they usually get a lift. They get bought. So that's why that's why it didn't come in. It also was clearing resistance. It didn't really come in much. It came in and then got bought. But this was actually novice in that it went up 1, 2, 3, 4, 5, 6 days in a row, with the last day being the largest. So that's good. But again, clear the 200, so it wasn't that good, because most gaps that clear the 200, they get bought. Okay? Regardless of the quality of the gap. Next on the list is MNTA. This one, that day, that was definitely novice. It actually ran up, so it would have been a good short at the top. Was too wild, so I didn't trade it, but this was good. I mean, this would have been a good play to short it at the top. It dropped from the top down to here, $3 probably, to $29 or so that day. And notice it was, it was just kind of, I know it was 2 days, but really 1 day off the 20. You want the better ones are the ones that had been running up already, like the PRGS so far is the best, or EVRG, I would say second best, up, 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 multiple bars in a row, and then gaps up. Okay, this is tier 1. This is picture perfect beyond BYND as a short. So notice up 1, 2, 3. Look at the size of the bar. Look at the volume, which means a lot of people already bought it. So, and then the next day it gaps up. Who's buying it now? It's the people that are thinking, oh my God, this is the next Tesla, let's jump in. They buy it and then there's no more buying. And then it collapses. Now, sometimes it's just novice for 1 day or 2 days, meaning it comes in for just a little bit and then continues higher. But for that day, it was a short, not a long, as a day trade. Does that make sense? Some novice gaps set the top for months to come, meaning it's it. I can think of the RAD recently, at the end of last year or so. This is as good of a novice gap as it gets, but also since the stock had been moving up from like $8 or so, look at this, $7, $8, and then it more than doubled, it tripled in 1, 2, 3, 4, 5, the biggest bar, a spike in volume, and then a huge gap up the next day. That, my friends, is as good of a novice gap as it gets, truly. RAD. At the end of last year, I took some time off, just Christmas. So I wasn't even around, but when I came back and I saw this, I thought, oh my God, this should have been a great short. I was told that it was hard to borrow for a lot of people, so maybe they couldn't have, maybe it was hard to borrow for me, I don't know. But this is the best novice gap I've seen recently, the RAD. And notice this should set the top for months to come. This stock, RAD, is not going back up to 22 for a long time, because something like this, that's a blow off top almost, when it's up so much and then gaps up. For example, what's another thing that it's not in my notebook, I think, but it was on my daily watches today, as a novice going climactic. What was it? It's GNTX or GTX. Does anybody know what the symbol is? It's not in my notebook because it doesn't gap, but it's like GDX or GNTX. Does anybody know what it is? Anybody? Okay, let's take a look at it. GNTX. I don't think it's GNTX. No, GTX, GDX. What's the symbol? Help me out here. I don't have it. It was on today's daily watch list. I can go to the daily watch list and look it up, but I just don't have it handy right now. GSX, thank you, GSX. So if something like the GSX were to gap up tomorrow, see this? Up, big green bars. And imagine if we get a 10-15% gap up the next day. This would be almost as good as the RAD. Not as good, honestly, because if you look at the GSX, it's up a lot, but how much is it up? It's up 50%, let's say. right? Or in the since the beginning of the year, it's maybe up more than 50%, about 50% maybe 75%. RAD was up 300%, 200%, I don't know how much. You can do the math. So it was up a lot more and printed a huge bar, right? So RAD would still be better, but something like the GSX, if this were to gap up a significant amount, it should set the top for months to come. Okay, so that's the GSX. So beyond, as you can see, that's why I marked it Novice, because it was up a lot and then gapped up. Tesla, the same thing. Wasn't as good as Beyond, I think, in my opinion, but that was Novice and dropped for 3 days in a row. A GWPH, I don't want to go over the whole thing, but as you can see, big green bar and then gap up. NKTR, big green bar and a gap up. That's Novice. Okay. OCFT, up and then a gap up. This is right here on the left side. Up and then a gap up. That's Novice. Okay. TRIL, up right here and then a gap up, but the gap was small. I mean, the stock ended up down on the day, but it was probably very wild, moved up initially and then came in. Another thing I want to say is Novice gaps don't really work very well on low price stocks. So don't look for $2-3 stocks that gap up after a big green bar. Don't look to short them too much. I mean, be very careful, be very selective, because Novice gaps work better on higher price stocks. BNTX, look at this, up and then a gap up. That's Novice. PLX, up and then a gap up. That's Novice. AVAV, look at this, big green bar and then a gap up the next day. That's Novice. You might, again, some people might argue that this is just off the 20, and I would say you would have a point. Yes, you have a point. But this kind of bar, it's the biggest bar I see on the entire chart. Huge already. So if it was an average size bar, then I'd say, yeah, don't short it. But after a huge bar and a big gap up the next day, I wouldn't play it long. I'll tell you that much. I'd only play it short. And then KTOS, another good Novice gap. So as you can see, this is all from my notebook, with the exception of the EVRG and the RAD. It's all in the notebook, and those are all Novice. Now, what about the rest of these gaps? Like every day I have 20, 30 gaps. Look at this. Every single day. I don't know if you can see it. You probably can't. But those are all professional. All professional. So 80 to 90% of the gaps are professional. The rest are Novice. And that's why I try not to emphasize when I teach. I try not to emphasize not gap after a big move up like this. See the PRGS? Big move up and then it gaps. No, it's going, might be going sideways like so, and then it gaps down, breaks that base, or gaps up, breaks above resistance. So that's igniting a new move. It's not ending an old one. Does that make sense? So that's the difference. Novice gap in the same direction of an old move to end it and ends it. Professional gap from the 20 and they ignite a new move. They don't end they don't end an already well established move. They don't gap in the same direction. Today's trade, what was today's trade this afternoon? That was the best trade today, MLCO short. So this was a day trade that I called in the room, and the market helped us a little bit because the market dropped. Let me show you the 15-minute chart, but you can see it. It's the short right here, but it was beautiful on the 15. It was better on the 15 because it had a 1, 2, 3. See this? That's called the shakeout or the money bar. Buyers actually tried to buy it, but notice it had a breakdown here, but I didn't do it because I don't short breakdowns from high the day bases. Too bullish. So I let them give me a secondary sign of weakness, and that's it. So the buyers tried to go higher, to take it higher here, and then failed. So the entry for this was under 23.20, but with a stop over 23. It's 23.21. This should be 23.21. Stop over this 23.40, 23.39. So, but that was the call. So right here short, stop right here, and then target was the lows. And as you can see, it actually got to the target and more. But why? Why would I short this stock and not any other stock? Why did I short this stock? Anybody? Should be easy by now, because look at the daily chart. This stock was gapping under 2 solid green bars. So it's going against the most recent direction. Not only that, but it's also gapping against big green bars. Big green bars on big volume especially mean that it means that buyers have been traders have been buying the stock, okay? And today when the stock gapped down, every single buyer, every single person that bought it in the last 2 days is underwater. They woke up and they're like, oh my god, I'm down 5k, I'm down 200k, institutional trade or something like this. What do I do? Okay, so they're trapped. When the stock starts to drop, they're going to look to exit, which actually adds more selling pressure to the stock. So I look to short. I look to short these usually early in the morning and in the early afternoon too. So that's the two times: early in the morning if it has a lot of shock value, and also early in the afternoon to short it again. Now, when it's a sector, when it's the whole sector, this is a casino sector, was gapping down, then you have to be a little more careful, because the news is not just pertinent to this stock, it's the entire sector. So this stock is going to really move with its sector more than by itself on its own page. And I like to focus on stocks that are on their own page. But at any rate, this is a professional gap. Another professional gap from today's list would be the OMI. See this? A red bar and then a gap above it. That's professional long, but I missed the play on it, so I shouldn't have brought it up. I missed the play on it. I really, really liked it. I also like the array, but it gapped a little too much. So you see this? This is a professional gap, but notice how it gapped over a big red bar. But then it ended up gapping too much, and then was also extended. So maybe it wasn't as good as I thought it was. It moved up at the open, and then it collapsed later in the day. Again, every gap is professional unless it's clearly novice. What's clearly novice? I already went over that. Okay, so I hope that makes sense, the difference between pro and novice. But I want to discuss a little bit more why I like gaps. Why do I trade gaps? What's so good about gaps? Well, my friends, show me stocks that move as much as gapping stocks do. Show me, here, look at this list. Look at any list you want. They move so much. In fact, I one time did a webinar that I called 5-day moves in 30 minutes or less. Meaning gaps move in 30 minutes or less at the open. They put in a 5-day move in less than 30 minutes. So that's, as a day trader, you want to focus on momentum. You want to focus on movement. If there's no movement, how are you going to make money? Does that make sense? So I want to go where the oil is. Well, that's where the oil is. So they create a lot of volatility, a lot of movement. So that's one reason why I focus on gaps. Reason number two, if you can read the psychology, if you can read the daily chart and what the gap is doing to the traders that are already in the stock, then bingo, you can should be able to predict their actions. If you trap a cat in the corner of a room, it'll scratch you up, right? Imagine trapping a human being and they're losing money at the open. What are they going to do? They're going to immediately look to exit. Not everybody, but the majority don't have the pain tolerance. If they're short-term traders, they were in it for just to make a quick buck and move on to something else. Now they're trapped, and the stock. Imagine the stock gapping down against them and then starts to fall at the open. They'll sell as the stock drops. The ones that haven't yet sold will also, now their losses are getting bigger and bigger. They look to sell. When they sell, that pushes the stock lower even more. And then the ones that are still in it, now they're under more pressure to sell, and it starts that snowball effect. The same with gap ups. If a stock gaps from a red bar, that means traders, the majority of traders the previous day, shorted it or sold it at least. So when the stock gaps up the next day, every single person that shorted the stock the previous day, every single person was underwater, right? And so if the stock moves up at the open, starts to move up, they're going to scramble to cover. Their covering is the same as buying the stock, and it lifts prices even higher. As the stock moves up, the ones that didn't cover at the open, now their losses, they're sitting on bigger losses, and they start to cover. The ones that, see what I mean? And it starts the snowball effect. So that's why I focus on gaps. First, they create a lot of volatility. Second, they give us the concept of trapped traders. Trapped traders. Okay, so if you can read the chart, you'd be able to identify whether the stock has trapped traders or not. And number three is gaps create moves that you can take advantage of for day trading and swing trading. Today's, for example, TGT triggered short today. But look, how did I know to short TGT? For example, I didn't just do TGT, I did a bunch, but TGT comes to mind right away. Why? It was just sitting, doing nothing on the daily chart. Why would I short it? Because of the gap a few days ago. This was a very powerful gap, and the stock consolidated, so if it breaks down, then it should continue lower. It should have follow through. Does that make sense? So I can actually find really good day trades, like I showed you on the MLCO from today, but I can also find really good swing trades off of gapping stocks. What else not to like about them? Does that make sense? Does that make sense? For all these reasons, I'm a gap trader. Give me gaps or give me death. As a day trader and even as a swing trader, give me gaps or give me death. Not kidding. I love to trade gaps. I just do. And if you don't, that's fine. But the problem, if you don't focus on gapping stocks or stocks that move, how are you making money? I don't know how I wouldn't be able to make money, even if I still knew as much as I actually do about trading and charts. And if I'm focusing on stocks that are printing average moves, how am I gonna end up with anything better than average result? So I like to focus on things that move a lot. And then with novice gaps, it's not shock value why I do them, it's exhaustion. It's capitulation, basically. Does that make sense? So that's why I look to do novice gaps. But as I said, if you don't like to go against the gap, then so be it. Don't worry about novice gaps. These are the novice gaps. I had to go back probably 7 days to find a dozen novice gaps. If I were to list the professional gaps, we would have 200. Maybe not, but we'd have a lot. So the majority of gaps are professional and not novice. Okay, so focus on professional gaps. Let me pick up the questions here. If we were to select among two novice gaps, hypothetical, would you prefer a big green bar the previous day or a big gap? So okay, the question is so hold on just a second. Just want to make sure I understand the question. Would you prefer a big green bar the previous day or a big gap? A big green bar, but I'm not sure I'm understanding the question right. But look, check it out. The previous day, look guys, you want a big green bar. You don't want a big gap the previous day. Like, you see this? That's a big green bar the previous day. That's what you want. You don't want a stock that, let's say, oh, you're saying, I'm sorry. I think what you're asking is, would you rather have a big green bar or a big gap? Because sometimes we do have a big green bar, like the JMIA, let's say, a couple days ago. Here it is. But a very small gap. So what would I rather have? A big green bar the day before or a big gap today? The truth is, there are 5 things that we look at when we look at gaps. One of them is the previous day or the short-term pattern, the previous day. Another one of them is the size of the gap. So there's 2 different things. Would I like my, would I like, if I had children, would I like this child or that child? It's a tough call. I probably would like them both the same, right? So, I would say, I don't know. I'm not really sure. Probably I would rather go with the big green bar the previous day. Probably. Not the big gap necessarily. Because sometimes even big gaps, like, I'll show you, like the XPO, we had it on the list, but I deleted it, I think. Here's a big gap. It didn't go anywhere. Did it have a big green bar the previous day? It didn't. Whereas MNTA, not MNTA, MNTA did actually have a big green bar. Whereas which one were we looking at? The JMIA had a big green bar, small gap, it still worked. Does that make sense? RBZ, which I think I took off the list here, RBZ, big green bar, it still worked even though it was a small gap down. So I probably would prefer a big green bar as opposed to a big gap today. But I like to have both. I like to have a big green bar the previous day and a big gap today. Both of these are good. Okay? So you know, it's like you said, it's a hypothetical question. I like to have both. I like to have both. Okay, what else? So now on the weekend I did this video about how to swing trade off of gaps, right? So here's what I did. I mean, I'm going to show you what here it is. So, and I said, you know, if the gap is professional, so this is what I said, right? There are two types of gaps. If the gap is pro, then I want to look to play it long. If the gap is novice, then I want to look for swing patterns to play against the gap, to play it if it's a gap down, to play it long, if it's a gap up, to play it short. So and I showed all these examples, and as you can see, just check it out. I mean, I didn't rearrange. This is exactly what I went over on the weekend. These are exactly the same slides. Just take a look at them, every one of them. Where are they gapping from? The 20 MA, the blue line, right? The blue line, every one of them. The blue line, well, here, and then the gap up, that red bar. The blue line, it means, you know, these are all pro. They're all pro. See that? I did not change the charts that I went over. These are the same. The blue line, they're all gapping from the blue line. So if the stock gaps from the 20, it's pro. But if the stock gaps from the 20 and gaps from a red bar, like this one did, it gets 2 points. That's great. Those are the ones that I really like. Now, are there other things that I would really like? Yes, there are 5 things that we look at when we look at gaps. And this is all taught, by the way, in Advanced Gap Strategies class. If you are interested at all, just email info@t3live.com. They have deals all the time. You might be able to get it for really cheap. I don't know. Just email them, info@t3live.com. If you want to find out about this course, it's an 8-hour class that I taught. And you get the home study recording, basically, as well as the PDF manual. Now look at this. Gaps from the 20 and over red bar. Beautiful. And then how did it set up? It's like the TGT today, but to the upside. So as a breakout, long, stop. Beautiful. Does that make sense? And then the next one, I don't know what the next one looks like. It gapped from a green bar, a couple of them, but right from the 20. In either case, it didn't set up as a breakout, it's set up as a pullback. So once the previous bar's high gets taken out, so which bar's high got taken out? Right here. Long, stop right here. It's a buy setup. See it? So the next on the list, I don't want to review the entire list. From a red bar, big gap, and then a pullback. Beautiful. Buy setup. So stocks can set up long either through base breakout or pullback. So I look for either a base breakout or a pullback after the gap. Does that make sense? Or a 1, 2, 3, which is a form of a breakout. Like the TGT is a 1, 2, 3, 1, 2, 3, 4. So in this case, pullback. The one after that, that's kind of a pullback also. The one after this is a 1, 2, 3, 4. It's like the TGT today is a 1, 2, 3, 4. This one is exactly a 1, 2, 3. What's a 1, 2, 3? 1, 2, 3 is when you have an igniting bar, which is the gap day, a resting bar, narrow range bar, and then a continuation bar that takes out the highs of both bars 1 and 2. And then you put your stop right here. Okay? That's a 1, 2, 3. So that's what I look for after a professional gap. This is a pullback, right? You know, this is a, I don't know what it is, like a pullback entry. Three bars down, and then the same to the downside. Notice gap under a green bar, short, 1, 2, 3. Gapped under green bar and short, 1, 2, 3, 4. Gapped under green bar and kind of a sell setup on this stock. See it? 1, 2, 3, short. See it? Beautiful. Short here, 1, 2, 3, short here, kind of a base breakdown. Short here, 1, 2, 3, 4. Also 1, 2, 3, 4, 5. 1, 2, 3, 4. Short, short. These are all pro. These are all pro. Okay? I don't want to keep going. There's a lot of charts, but you get the point. Beautiful, beautiful charts. Okay, now what is a novice gap, or what do you do when the stock is down a lot already and then gaps down a huge amount? That's more novice. Now, does this really look good did it look good as a novice gap to play it long on the day of the gap? I mean, on the day that it gapped? No, but as a swing trade, this could have been the bottom, probably. because the stock was down a lot and then gap down. It's like the ANAB that we recently did. I'll show you. I'd have to switch to the charts, I guess. Hold on just a second. Here we go. That's the charts. So ANAB, which we did, and SLDB also. Is that novice? I mean, it's gapping from the 20. No, but the stock was down a lot already. Look at the weekly chart. It had been down from 80 bucks, 83 to 10 bucks. Exactly 10 actually. Look at this. So when you get a big gap down after being down for so long, yes, the day of the gap, that's not a good novice gap to play it short necessarily, to play it long, because it was a gap down. But the move that is produced, the move that sets up after this gap, usually sets the bottom for months to come. So I played it long in the strategic swing trader program. See it? And then we got trailed out at 15 something, which is, you're gonna see it here. Trailed us out right here, just at the beginning of the year. See it? And then I think it went back up. Did it? Oh no, this is when it trailed us out right here. This is when it trailed us out. And then, yeah, it went back up. SLDB, I think the same thing, but that's a kind of an old one. See it? That's not a novice gap, but after the stock being down a lot and then a huge gap down, yeah, sometimes the move that forms after that kind of gap is going to be higher, and it's going to set the bottom for a while, for a long time to come. So if we were to switch back to this was not necessarily a novice gap, but it's coming after a multi-month drop. So what I look for in these kind of gaps, I look for the most important thing is big volume, because it indicates that everybody that wants to be in or out of the stock is already out. Does that make sense? And then I look for a pattern that sets up after this bar. A lot of times it's just a 1, 2, 3, like so. 1, 2, 3, and I play it long. But sometimes it's more of a base breakout, or it moves up right away, let's say, then I look for the pullback. It depends on what kind of pattern the stock gives me. So you see this? That's a 1, 2, 3. After being down a lot, gap down, and then long. Look at this. Down, gap down, long. Look at the move. Down a lot, but you don't see the chart really. It was down for months, and a gap down, huge volume. That's the bottom. Look at the move, guys. Look at the move. Amazing, isn't it? Pretty amazing. Same here. Set up as a sell setup failure or breakout. Down a lot, gap down, big volume. Every single one of these has got big volume. Look at this. Every single one of these has a big volume bar, which again is important when you're playing long off of novice, what you consider novice gaps here. So you're playing a gap down long, you gotta have that spike in volume. You just gotta have it. If you don't have it, you don't have a significant gap, which means you shouldn't even consider it. Consider playing it at all. So here it is, long. This is Tesla, your favorite stock, right? Down a lot, and then gaps into the 200, 180 or so, and then from there, bam, 227, and then now it's at 500, of course. So see that? Love these. I love it. Love it. And then a gap down, and then higher. Any questions? So let me just see. Large novice gaps often provide a long-term high or bottom. Correct, DD. Correct. That's correct. Any other questions? Any other questions? They set the top or the bottom for months, sometimes years to come. Years to come. So hopefully that. Any other questions? So for the people that thought, that I maybe didn't explain it enough, this stuff, when I went over these slides, are we clear? Did I explain it now better? Of course, I did it in 8 minutes, not even 8 minutes, in 7 minutes, I think, seven and a half minutes. So I didn't spend as much time as I did today. But are we good? Are we clear? What professional is, what novice is, what I look to do. Now, we didn't go over entries and tactics, and we did talk about the entries off the daily chart, but we didn't talk about intraday entries necessarily, what I look for at the open. For that, again, there's a class, 8-hour class, Advanced Gap Strategies. It's a long class, obviously. I'm here just trying to give you kind of an introduction and answer some of the questions that I got on the weekend, and expand on what I actually talked about on the weekend. So hopefully we're on the same page. We're all good and crystal clear. Good, great. Tom, Mark, sounds good. All right, everybody, that does it for today. Just want to see, did I finish? I think I did. Okay, yeah, I did. If you have any questions, reach out to info@t3live.com. They can obviously connect you with me, but first reach out to them, info@t3live.com. Oftentimes our customer service can answer your questions really quickly within like minutes after they receive the question, whereas I may take a day or two. So it's better to just send it to info@t3live.com or give them a call. And if you need to reach out to me, then they'll forward your email to me, okay? But with that said, I hope you enjoyed today's video. If you find benefit in these videos, in my videos, be sure to check the links in the description where you can learn more about my services. I also dropped a couple of links, one link for this weekend's video that I did, another link for another video that I did in the past that I think might be helpful. But also feel free to check out the links if you want to trade with me, find out how you can swing trade with me, day trade with me, whatever you want, whatever you need, okay? And if you found benefit in today's video, be sure to hit the like button. I appreciate it. I hope you have a nice evening, and I'll talk to you soon. Take care, everybody. Have a good night.